Morning traders, and this is your Aussie day trade setup for today. So we're starting off on the monthly just to highlight a couple of things that have happened here. So the first one is the importance of the 200 EMA. You can see there we pretty much rejected it on the monthly. And the second thing to point out is look at the volatility that has increased over pretty much this year compared to the rest of the months. And you can go back a number of years. Remember, each line that you see here represents 1 year, so between the lines is a year, and you can see pretty much what's transpired. Now, at the moment, that monthly, difficult to read. It does look like a bit of a rejection. We've got an engulfing on the weekly. We had a pin bar off the 200, the monthly 200 EMA, came back and tested it, rallied off it, and so far this week we are green. If we look at the daily and see the pattern that we had here, which was these indecision bars or range bars off a major level being the 200 EMA on the monthly, and we've rallied off it. We're doing some sort of consolidation now. In my mind right now, I'm going to use this level here. I'm not so sure that that is a consolidation for up or consolidation for down. So at the moment, there are magnets to the upside and magnets to the downside. So, the strategy still stays the same. Look for opportunities on the lower time frames and trade on the lower time frames. So trend is up on the 3 hour. You can see this week trend has been up. It has been a little bit topsy-turvy at the moment. But my fear at the moment, based on what happened on the Dax, the Dow last night, is there is a potential double top brewing there. And I have a feeling you're going to see this thing follow suit. So if we just look at what's happening right now, the Nasdaq futures are down 1.4%, the S&P futures is down 1.9%, and the Dow futures is down 1.9% as well. So Rand dollar is 17.91, so that's slightly weaker, 0.4% weaker, and 10 cent, surprisingly enough, is 0.7% up. So mixed bag, but we did have a 2% fall last night on the US marks, or 1.8% on average, I'd say. 1.8 on the Dow, 1.6 on the S&P, and the one that we need to worry about, the Nasdaq, which was 1% down, 0.96% down. So I suspect we're going to get a gap down today, and then it's going to be a case of whether this level to the downside holds. And for me, the level to the downside right now is 39.088. That's kind of the level that we need to hold. So range trade as far as I'm concerned. And you can see how messy yesterday was as well. We had a bit of a rally, pull back onto moving averages all over the place, and then rallied at the close. Ignore this last bar, that's nonsense data. But I have a feeling that this is our second attempt up. We're now going to get a gap down. We'll probably bounce off the 200 EMA here. Moving averages are pointing up, so the trend is up at the moment. But down to this point and then back up again, or just to create a lower high. So my advice, quite simply, is if you've got the time to watch this, you can see the 12 minutes, this chaos here. There's no ways to trade that using this moving average strategy, because you're looking for shorts underneath it, and then all of a sudden you'll be looking for longs, you'll be stopped out, and then eventually it gets going. So come down to 5, come down to a 3 minute, and trade accordingly. Okay, so you can see at the open, you had a pretty strong rally and then going sideways. Moving averages start contracting, coming closer and closer together till you break through and you reject it there. So if you look at that, your entry on the pin bar is a break below it, and your stop is just above it here. So let's just raise it to like 100-point stop loss. Okay, 100-point stop loss and your ultimate target would have been the 200 EMA, or alternatively the gap close. I think we got the gap close. No, we didn't. Oh, sorry, we did. That's the nonsense status. So there's gap close there. So that would have been your ultimate goal, which would have been a good 400-point trade, 400-point risk, so 4-to-1 trade. So that's why I say the volatility at the moment creates lots of opportunities, but you need to be sitting at your charts. And if we just go down to the 3-minute, you'll see the same scenario here. So the open was pretty much with the moving averages pointing up, trend is up. You could have taken a trade. I wouldn't take it in the first sort of 10 minutes of the day, but break above that fractal. You've got a 150-point risk here, and all you're looking for is a 2% gain. So you're looking for 300 points. And you can see there's a lot of people that trade that same strategy. There's 300 points, people start selling, and out you go. Okay, and the same scenario sits here. If you look at this chaos, switch, cross over the moving averages. You've got a pin bar rejection of the moving averages there. Good strong signal, short, down you go. Okay, so, and even on the move up, you can see here you get a crossover, rejection, 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 good trade up, tight stop loss, and take your profit as close as possible. Okay, so I think that just using the strategy, and especially when you've got a grouping of the oscillators here as well. You can see on the 3-minute actually plays out pretty well. 5-minute plays out very well as well, and the 6-minute also plays out fairly well. The lower the time frame, the less risk you play. Okay, so for me today, that's pretty much the way I would trade this. Not even going to try and ascertain whether we're in a bigger trend or not an hour. We are in a range at the moment, and it's a bit of a channel within the range. So there's my channel there. Okay, so that could be a flag. So if we break below that, expect us to come and touch the bottom of the range. And a break below this level is going to validate a big head and shoulders. So shoulder, head, shoulder. Okay, so anyway, I think it's going to be a gap down and probably short for some part of today until we see what's happening in the rest of the world, and then it's either going to consolidate at this level or we are going to continue to the downside. And my concern is still based on what I see on the oscillators here. Okay, stochastics are coming together now. Williams percentage R is well above the -80 line. So if we get a daily close and the Williams percentage R below that and a crossover, that's a bearish signal. And you can see here it is here. There's move down, and then we get the crossover right about here, and down we went. Okay, so anyway, that's my view for today. Short it is more than likely, but take this off the lower time frames. Don't try and trade it on the higher time frames. Not really going to work out. So take it off a 5-minute, 6-minute chart, 3-minute chart if you want, and trade accordingly. Okay, anyway guys, hope it helps, and we'll catch you later. Cheers for now.